Well, hello everyone. Nolan McIntosh here again for your market update for this week. Well, markets set records while the Iran stalemate grinds on. There's something surreal about watching stocks climb to new highs while the world's busiest oil route sits effectively shut. The S&P 500 cleared 7,800 for the first time on Thursday, setting its 27th record close of the year. It was the third consecutive weekly gain for the S&P 500, its longest run since May. Earnings deserve much of the credit, with 440 of the 500 S&P 500 companies have reported second quarter results. 86% have surpassed estimates. Technology and AI related names led the way once again, and the enthusiasm has started spreading into the other sectors. Meanwhile, the picture in the Strait of Hormuz hasn't budged. Tanker traffic through the waterway has slowed to a trickle, with only a handful of vessels crossing in recent days. Iran says the strait stays closed until Washington meets its conditions, but Washington says it controls the waterway as talks keep stalling. Oil has been whipsawing on every headline, trading above $80 midweek and falling more than 2% on Thursday before climbing back up by the end of the week after Treasury Secretary Scott Bessent and the U.S. would impose economic measures on Iran that have never been seen. The International Energy Agency also warned that the global oil stockpiles are drawing down quickly. At the pump, the national average pushed back up over $4 per gallon. What should we make of a market of record highs against that backdrop? Well, investors appear to have priced in the war as a known quantity rather than a resolved one. The risk premium hasn't gone anywhere. Well, inflation cools somewhat. Both inflation reports last week came in soft. The July Consumer Price Index reading rose 0.1% for the month and 3.4% year over year, down from the 3.5% year over year in June and right in line with the forecasts. Core CPI, which strips out food and energy, rose 0.2% for the month and 2.5% annually. Shelter did most of the monthly lifting, accounting for roughly 2/3 of the headline increase. Energy was a big reason for this softer number, falling 1.5% in July and dropping 5.7% in June. Look at the annual figures, though, and the story flips. Energy is still up 14.7% from 1 year ago. Gas is up 24.6%, and fuel oil is up 39.1%. Wholesale prices told a similar story. The producer price index was flat month over month, and the annual rate dropped 4.7% from 5.5% in June, below the 4.9% economists had penciled in. This is inflation decelerating from a shock rather than resuming its earlier downward trend. CPI was running 2.4% in February before the conflict began, spiked to 4.2% in May, and has eased for 2 months since. Where it settles from here depends largely on oil, and oil depends on the standoff for which nobody can predict the ending date. That dynamic is one of the reasons why the Federal Reserve conversation sounds so different this year. Traders trimmed the odds of a September rate hike to roughly 31% after the CPI release, headed into the Fed's Jackson Hole Symposium August 27th through the 29th. Well, coming this week, we'll start with the Empire State Manufacturing Survey and NAHB Housing Market Index on Monday. Tuesday will feature housing starts, import prices, industrial production, and pending home sales. On Wednesday, the minutes from the Fed meeting will be published. It will be interesting to see if we get any glean of additional insights on the Fed's outlook and the division among the committee members. The Philadelphia Fed will release its Business Outlook Survey on Thursday. We'll also get weekly jobless claims and leading indicators that day. Finally, we'll wrap up the week with the U.S. flash manufacturing and service numbers. Well, that's it for your market update for this week. We'll be in your mailbox again next week. As always, we are here for you, 989-692-2200 if there's any questions, or plenty of resources and events on our website at focuswealthplan.com.